Welcome back to another episode of Realty Talk. I'm not your host, but the host does pay me in free alcohol and a marketing title that I got to choose myself. And now your host who puts the real in real estate, Anthony Joplin. How the flim flam are ya? There it is. Iconic. Sippity doo-dah.
If I was any better, it'd be a sin.
That's good.
You know, that's from the movie Wall Street back in the 80s.
Oh, wow.
Uh-huh, you're welcome for that.
Thank you. I needed that piece of information. Well, Cody was able to give me some feedback on our podcast.
I love him.
Specifically the Would You Rather game. And if you asked him, would you rather play a fun game or get right to the information? His answer is that he doesn't love me or like any of my fun ideas. So we won't be having... One sec, the host is dying.
That's all right. And we're back.
So we won't be having a single ounce of fun today. No fun will be had.
It's too late.
And anytime you laugh, I will be calling you a mildly unaggressive name. Yes, Levi helped me. Okay, shut up, Banana Pants.
Of all the days to have a cough. Oh, my God. Don't cough, don't cough, don't
Okay,
cough.
so we're just going to get right into it. Let's talk real estate investment trusts, otherwise known as REITs.
It's a REIT.
REIT, motherfucker.
REIT. You know, my wife calls those cops. Cops are REITs.
Really? Why?
I don't know.
Not whoop whoops?
Nope, call them REITs.
Interesting.
Yeah, well, you know, to each their own.
Right? To read their own?
To read their own.
Okay, Chuckles, stop.
The clown.
Let's briefly discuss what the heck these trusts even are.
So the real estate investment trust is really just it's a vehicle for people to invest in real estate using Wall Street. So I'm trying to keep this as simple as possible. So if you have a real estate investment trust, you have a securities license to chop that. Okay, let me back this all the way up. Real estate is secured by one thing. Right, so real estate is secured by that property that you invest in. So if you try to invest in, Bitcoin, you get slivers of that same Bitcoin till you get the whole Bitcoin, right?
Right.
So real estate, you buy the whole piece of real estate.
Right.
Okay, there's no divvying that up unless you want to divide it maybe 2-3 times between your family members or whatever, husband, wife, spouse, kids, whatever. A real estate investment trust, what they'll do is they'll grab that same piece of real estate and they'll divvy it up 1,000 times and say, okay, these little shares of this one property. Because they'll say, okay, this property may generate 10% worth of income over 12 months. I'm just making up numbers, right? And they'll say, they'll take that to 1,000 pieces and say, okay, who wants to buy these pieces? And then that fund buying that one asset gets split, and that's the real estate investment trust, is that asset class to buy that portfolio of single family, multifamily, commercial, whatever it may be, asset sliced up. So instead of saying, oh, I've got $150,000, $200,000, $2 million to invest in real estate, I've only got $80.
Yeah.
So it's a sliver so you can get into that type of investing.
Yeah. And I think one of the... because I had Cody explain this to me because I needed a big, strong man to explain it to me.
That's called mansplaining.
I know. Well, it was also just the basic fact that, sometimes whoever they might be, male or female, sometimes you just need someone to explain something to you if you don't know it. So I didn't know this. Because when you say real estate investment trust, you're thinking an actual trust. But it seems to be closer along the lines of a real estate S&P 500.
Okay, so let me make sure we just clarify that.
Yeah.
Okay, there are lots of REITs out there.
Yeah.
There are thousands of REITs out there. So what they'll do is that they'll say a really common REIT will go grab multifamily real estate, apartments, right? They'll go grab, 7,000 units, which, one complex doesn't have 7,000 doors.
Right.
They'll have, 600 or 500, whatever it is, different units, complexes, and then they're going to have, multiple units in there. So they'll grab all these different units and they'll split them all up. And then what they're going to do is take each individual asset and they're going to categorize it by risk. This is AAA, single A, double A, right? Or,
Okay.
And this, I guess it's triple, double, single, and then triple B, double B, single B, and then you have junk. So that's kind of the rating agencies for like Standard & Poor's and Moody's. So that's how you rate securities. So if you've got like some AAA stuff that's really good, then you got some like, triple B stuff, and then you got like a single A, and you kind of mix them all up, and you kind of have risk assessments on those. Those can all be fed into one package of a REIT.
How do you invest in a real estate investment trust? Got
it. Perfect. Good question. So I'm not speaking as a financial advisor or anything like that. This is not tax or financial advice. Okay, let me start there. So there's plenty of ways you can take your money and invest in REITs. They're usually on the stock exchange, public markets, things like that. So you would sign up for a brokerage account, things like Robinhood, E-Trade. Oh God, those are all gone.
Are they?
They got swallowed up by. Oh God, what's the big one that just got me? Charles Schwab.
Oh, that makes sense. I think ours is through Charles Schwab.
Yeah. So anyway, a brokerage account like that, you could invest your money into a brokerage account where, you could have your 401k self-directed. You could have your brokerage account. You could have your Roth IRA. You could have whatever you want. That money that goes into, then that fund invests in the REIT fund.
Okay.
You know what I mean? So you can have whatever vehicle tax purposes that you want investing in that type of asset.
Okay.
So that's where the wall is that you can decide where you want your money at what tax basis to invest in that asset.
Cool. What are the pros and cons of a REIT? Or are there any in any substantial category?
Well, if you can crowdfund money, if you can get money from a bunch of investors, then it's really easy to buy and be a big player in the space. So to have a REIT to invest in certain asset types is very powerful for that fund, very powerful for that buyer, and very powerful to make those deals happen. Because a lot of those times, those are not cheap deals. Those are hundreds of millions of dollars or whatever they are. So,
all right. I'm not sure you can speak onto this one, but why does it seem like REITs are not a bigger part of recommended long-term portfolios?
Oh,
Is it just the risk involved?
I got to be careful what I say. So I'm going to take my broker hat off. I'm going to Anthony Joplin hat on, just regular
Just Joe. A regular Joe.
Regular Joe.
He puts his pants on one leg at a time, just like us.
2 legs at a time.
Oh, that's interesting. Do you also pick up your dry cleaning?
What? No, it comes to me.
Oh, okay. So never mind. He's not like us at all.
No, I do. It's 1 leg at a time, and I do pick it up.
What a regular Joe.
For fuck's sake. What was the question?
Why are REITs not a bigger part of recommended long-term portfolios?
So a lot of the times is that the REITs will have the rate of return far less than what they could get as an alternative investment in the other market areas.
Interesting.
Here's the casino.
That's true.
So think of the stock market like a casino.
Yeah.
Yeah.
Sometimes you hit, sometimes you miss.
It's funny. A lot of misses in the stock market.
Yeah.
Yeah. So you have a lot of fixed income. You got a lot of safe investments. Those are pretty standard lower yield products. REITs are usually lower yield products.
Gotcha.
Not as sexy as I'm going to dump a bunch into NVIDIA and 3x my money in 90 days.
That is sexy.
It is sexy.
I would love that.
Problem is I'm not that guy.
Yeah.
I'm going to REIT.
Or do you REIT?
REIT.
do you do a lot of REIT? Okay, Lint Liquor, shut up. I had to throw Lint Liquor in there at some time. Of the mildly unaggressive name calling, Lint Liquor is on every. Should be.
You cootie queen.
That's on here too.
Stop.
That's coming up. Okay, focus up.
And we're back.
All right. So, do you invest in REITs at all?
No.
I do. Well, I guess my husband does, and by that association, I do.
Because what's yours is what's mine is mine, and what's yours is mine.
Yes.
That's it. Congrats, Cody. Figured it out.
Yeah, he just does everything, and then he tells me, and I'm like, he's like, I know you don't care, but I'm like, you're really cute. How will you tell me about your investment portfolio? I love that he gets to just listen to this on Spotify.
I love him so much.
On his way to work or something, he's like,
have a great shift. All I could hear was, fuck you guys.
All right, we're going to get on to the next question, you Honda Civic.
Now I take some offense to that.
Mildly unaggressive, but still enough to be mildly aggressive.
Wait, a Honda Civic?
Yeah. I know, how dare I? How realistic is it to generate a good chunk of income from REITs that pay out monthly dividends?
Wow, you better have a lot of money.
A lot? Yeah.
To start with? Yeah.
What would you qualify as a lot of money?
There's 2 commas in it.
Oh my God, that is a lot.
Yeah, there's to make meaningful amount of money on flow like that.
Yeah.
To be able to live off of and through a REIT.
Yeah.
It's going to be a lot of money.
Would it just be easier to take those 2 commas and go buy a
Your
single home?
Your own asset?
Yeah.
Yeah.
Yeah, that's what I figured.
But the problem is that you have diversified risk versus singular risk.
Right.
You know?
Yeah,
so
you got one asset versus
REIT. It's true.
At what point should someone start looking into a real estate trust? Or is there no wrong or right time to start?
It's just what your risk portfolio is going to be. If
Right.
you need some good rates of return on some good relatively safe investments, find some decent REITs that offer general decent returns, and whether that dividend is quarterly, monthly, or annually, it doesn't matter what it is. Do they reinvest the dividend? I don't know. It's up to you and what your portfolio looks like. But if you're like, hey, I don't want to lose this money, and I got to make more than my 8 basis points per year from my bank, shove it in a REIT. It's not going to hurt you.
That's true.
It may hurt you a little bit depending on the REIT. Don't pick a shitty one.
Well,
this is not investment advice.
I was going to say, I'm like, we can't really say what is or is not a good REIT.
No, yeah.
So that's just do your research on your own with a CPA, probably. Not Joblin. Not a CPA. Not a CPA. Yes, a CPA. Mm-mm. He needs to swallow his beverage to make sure I know what I'm talking about. What the fuck?
Financial advisor.
Financial advisor.
There you go.
Listen, I never claimed to be smart.
If you are very aggressive, like I was very aggressive in my early 20s, I invested in everything that had lots of high yields. So is a REIT worth investing in your early 20s? For me, I did not think so. Mm-hmm. So I dumped my money in other forms of real estate. I dumped my money in some businesses. I dumped some money in the stock market. That's some relatively small cap stuff. Mm-hmm. Right. And I would say 65% of it panned out really well.
Okay.
And the other 35% I got fucking shellacked on. Like, I got fucking.
But that's high risk.
Have you ever seen Godzilla?
No.
I was Tokyo in that scenario for the 35%.
Okay. Yeah.
Yeah, it was so bad. How bad was it? It was so bad. My money looked at me while it was burning on fire. Save me, save me. And I looked at it and I watched it burn.
And you were like,
oops.
Burn it. Whoops. Sorry.
Yeah,
bye.
but the other 65 I was pretty stoked about. And that, that's where you have that kind of risk reward thing. You're like, well, I didn't have to lose 35%, but
whoops.
So risk versus, are you more stable? Do you want a stable income? If you want to lose no money and gain, 4% money or whatever, 6% money, that's good too. You're more than welcome to do that. Mm-hmm. I can't speak to what you should invest in,
right.
But, as far as, safe investments go, there's plenty of products out there.
Yeah. Because I know when we had mentioned the topic of real estate investment trusts, you had mentioned that this is a popular topic right now. Mm-hmm. Is there a reason real estate investment trusts are popular right now?
Not for the consumer, it's for the syndicators.
Okay.
Yeah, so it's if you have syndication, well, I say REITs as in like the REITs take a long time to build. right? And then you have to have mandates on what you can buy, and you have buy box limits and things like that. So that's the difference between that and then syndication money. Syndication money is you and like 10 friends grabbing like a family and friends fund.
Right.
That's not like a Reg D or a Reg A or anything like that. It's not regulatory like the REIT is.
Yeah.
REIT, you got to have securities licenses to sell those and open markets and all that, blah, blah, blah. So those syndications are very popular. As long as you can have friends and family invest into a trust, everybody pools their money and they buy something big, everyone gets a piece of the pie. That's not regulated, right? I think it's 10 is the cap. Don't quote me. But it's going to be something like that where it becomes this small fund of private money. I knew a guy that was really investing in buying real estate notes.
Okay.
Same thing, syndication. He said he was a hedge fund. Incorrect. So he was not a hedge fund. He was a guy who was syndicating with a friends and family fund, but not a hedge fund. Hedge funds operate similarly, but they take points off of the management of fees investing in certain types of products, right? So this guy had his own money, investing his own money and taking the share what he invested.
Gotcha.
That's a syndication.
Okay.
So syndication, investing in REITs, syndication, and hedge funds are all kind of the same pools of money to invest in big assets.
Okay. Now, is that something, not REIT specifically, is that something Joplin Financial can help with if you have 9 other friends that you want to invest in a property with?
If you've got a small group of friends that are like, hey, I want to get into real estate, we don't know where to start, we can help with that. But once you start getting into like real investment trusts, the bigger, couple $100 million deals, those are really tough.
Yeah, but if they wanted to go splitsies on a triplex or something.
As long as it's less than 10, if you want to say a triplex, you could even have, say you got a bunch of rich friends. So you had, I got $100 million here, $100 million here, $100 million here. You got $300 million amongst 3 friends. You could turn around and buy a city in Ohio, or like
right.
like a city of Ohio. You could buy a large pool of assets just with that friends and family fund. It doesn't have to be a regulated fund to go invest in stuff like that.
Cool.
Yeah.
All right. So it sounds like there's options. The options are varied in real estate. So that's always good to know because we want to diversify that portfolio. Diversify that bitch. And because it seems like the only real answer in investments for any solid cross-the-board piece of advice is just diversify.
There it is.
This is what I get for gesturing. I always whack the microphone.
That's a whack-a-mole.
Whack-a-mic.
Beep.
So, this was just going to be a quick, short podcast on real estate investment trust, and that is we're going to tie a bow on that. And I hope no one had an ounce of fun in this whole entire bitch.
Wah, wah.
Wah, wah.
Thanks, Cody.
Yeah.
I hope you're driving to work and you're like, that's it?
Yeah. Right? Right? Voldemort hugger.
What?
I really wanted to use
Why
that
would you even?
Because it fits the vibe.
Sure does. Wait, you're going to say that about me?
No, I'm talking about Cody.
VICIOUS. Are we vicious? Oh, yes.
Let's wrap a bow on this one. Take us away. Okay, I'm going to end the episode here before it gets too wild. Bye.